What's up, everyone? Are you here yet? This is kind of an impromptu session. Mostly, what we're going to do is see what kind of questions you have. If there are some shorts you've created or any issues that you've been directly facing, we'll deal with that. So just drop in the questions that you want to ask here. I'll give you an overview till then. First is crude oil has given us a massive drop, right? So it's come down by about what? Let's look at a more closer chart. So this is about a 20% drop, which I think is justified. Though I don't think there's much more downside. About 80, this support line somewhere here, max maybe to here, but it's not going below 80 for sure. So if it gets close to 80, I'd even be going long on crude. First commodity play that I'll confidently be making. The markets, of course, we know are gap up. They're going to gap up big. Many stocks will see short covering following that as well. So I wouldn't short the initial rally. It could fall, right? Very unpredictable. But I think because of this big a gap up, especially in particular stocks like HPCL, BPCL, IOC, we'll probably see more short covering coming in. And I'm looking to short them still. So the OMC's ka short has not gone away. At $80, they're barely profitable. What is priced into OMCs even at these prices? So if I look at a Hind Petro ka chart, just dealing with OMCs, because I think a lot of you would be long on OMCs. Even at an $80 ka price chart, this rally, right, this entire rally from 160 to 377 in HPCL is unjustified. It should not exist. So if you remember, in this entire period, right, just if we compare the two charts, look at it from maybe 2020 to October 2023, and we look at crude ka chart for the same period, right? So 2021, I can get 2022 going. So from this period, 31 all the way up to here, right? It went up to what, some 113, and it came back to 70, 75 or something like that. So that's the range that crude will come in here as well. Through this entire period where crude was up to here, even up till 80, Hind Petro did not really give you a return. The return started once crude started falling below the 70 ka range into the 60s and even came into 50s, because we had global oversupply, global glut of crude. So the general consensus was crude prices will not rise, they'll stay at these levels. So 60, 65 ka level with Russian discount, that's when Indian OMCs were extremely profitable. 80, and especially if it crosses 100, then they become massively unprofitable. The government has to bear the brunt. But even above 80, they're not going to make a lot of profits. The excise duty will also come back, so that also goes away. So 10 rupees per barrel per liter, so we can remove straight off of that, right? That's about 10%. So for OMCs, they'll rally now, and I'm happy because I will look to short them again. Exactly where will depend on how this plays out. I don't expect this ceasefire to be the final one. It could be. I'm not going to say it won't be, but I'll have to see how it develops, because Russia and Ukraine, I just checked, have 20 to 25 ceasefires happen, right? And Iran's demands, the US cannot meet. Hey, Sniper Dog. Hi, Sniper Dog. I don't think this has completely changed, right? The only thing that has changed is the Iran trigger going away. So for the current future, for the foreseeable future, it's still a bull market in the sense that stocks will go up. How far they go up depends on negotiations. If the Iran war even ends completely, we're not entering a new bull market yet. I'll be very careful about that, because the systemic shock that has come in, right, that's going to stay for 2 to 3 months, and we're going to see implications beyond what we can now correct. The only thing that changes if this is a permanent ceasefire is we don't go into a massive global recession. We'll still see a slowdown. We'll still see inflation come in. So central banks can't cut rates anymore. And that becomes very important, because cutting rates, if you remember, if you forget the Iran war, recall how hard Mr. Trump had been calling for cutting rates, because there was slowdown everywhere. Even in India, we cut our taxes, RBI cut rates so many times. So these issues that the Iran war exacerbated, they didn't just disappear overnight, right? And this shock is in. So while we see this gap up, and we should be happy, we'll make some money out of it, we should not get carried away, is what I'm trying to say. This has not changed the fundamental texture of the market. For me, it's a sharp short covering rally, which I called for, right? I told everyone last week we'll see short coverings, sharp short covering. So temporarily, yes. Temporarily, Raghav, for example, I told you on Sunday, and I think we had a session before that as well, where I said I'm going long IT. I've reduced my exposure in HPCL, IOC, and everything else. And I'm going long IT. I went long on Dixon Tech also yesterday, but it's a short term play. The global issues have not disappeared. The slowdown has not disappeared. We've added a shock to the system. And I'll remind you guys, just for safety measures, right? Every time we've had a massive crude oil shock, right? Crude versus Dow, let's say. Let's hope we find a chart to show you that. Every time we've had a massive shock, right? In crude, a recession or a massive global slowdown has followed. So let's try to see how we read this chart. This seems to be oil and this is S&P, right? So whenever oil spikes, we see markets correct very heavily. Not a little, very heavily. And this is a massive spike here, right? So this oil spike thing that happened in 21, prices came down after that. Prices didn't stay at that level, right? We found ways around, but we still got an inflation shock that we had to come out of. So just because crude is crashing, the texture did not change. The problems have not disappeared. Brilliant for us. We make some money. Nifty doesn't crash to 18,000 anymore, thankfully, because we'll probably get to 23,500, maybe 24,000 in this rally. Easily, I think we should be able to manage that. So we're already here. 24,000 seems likely, maybe even higher than that. But systemic problems haven't disappeared. So for me, going long futures was thankfully a good idea. Removing HPCL and all was thankfully a good idea. I did make a mistake though. In case you guys are feeling bad about getting stuck somewhere, hey Rudra, I also made a mistake. I went short on Ashok Leyland yesterday. And I didn't feel right doing it, but I did because I thought maybe we'll see something bad happen. Nobody's giving Trump the credit. Maybe he'll do something bad. So I'm going to take some loss in that. Everyone's going to do that, right? Thankfully, I was long, so that'll counter that. But don't feel bad about having taken a position that is now going to make a little bit of loss. It's fine. As long as you were balanced, as long as we know what our medium term, long term play is, even missing the short covering rally isn't a huge deal. Nothing to feel panicky about. And that's the key point. Markets are going to go up. They might go up for a little while. All-time highs, I don't really think so because the problems haven't disappeared. In fact, we might see profit booking coming in today itself. Because remember, it's a ceasefire that's temporary. And the demands of the two countries are not really being met easily. The one thing that is working is Trump's weakness. He needs to get out of this war. So for him, it's the perfect solution. Right? He gets a temporary ceasefire. He brings his ships out and he just a week later or something says, you know what, we're done with this. They're not agreeing to it, but we don't want to spend too much time. The Strait of Hormuz is open. My job is done. If it now closes, not my problem. Right? And then he puts the impetus on Iran to keep the Strait of Hormuz closed. And then Iran becomes the villain. Right? So he can play the narrative that way. We must not forget about Israel, though. They have had some issues, right? They've been bombarded. They haven't gotten the time to consolidate once this started because they were being bombed by everyone. So Israel agreed to the ceasefire probably out of desperation, not out of will. And once they consolidate, good chance that they do something to again cause problems. There's still all of that at play. The key point here is not to get panicked, not to get carried away. If we have managed our positions the way I've been talking about, good money to be made here. There'll be some small losses in shorts. To hold them or not, time will tell. If there are some stocks that give you 10%, 15% gap ups, they'll probably come back down. For example, in Ashok Leyland, I think it's a good short for a medium term. I still think it's a very good short for a medium term. Pardon me. If I do see it go up only 1%, I will try to come out of it. Being honest here. If I only get a 1% loss on it, I'm coming out of it. But if it's a 7% gap up, I'm staying in it. Let's see where it goes. Maybe I have to book a loss. The markets always take back a little bit. So all fine there. Not to get carried away though. So immediate term, Sniper Dog, it should get better today, of course, right? It should change today. People, if they were holding off on a deal, they might think I'm getting good prices. There'll be a small risk discount on it, of course, because suddenly the Middle East isn't as safe as it was. Because Dubai, Oman, and everything else was, Abu Dhabi was sold as extremely safe countries, right? No taxes. You don't have to worry about anything. You've got US bases, but suddenly that has been questioned, and that is forever. That's not really going away. Short-term longs, and depends on where it opens, Janan. I wouldn't want to buy into anything today, honestly, unless it opens right at, let's say, equal weight. Then yeah, like an HDFC. If L&T opens equal weight, of course that's a long, but I don't think the market will give us that chance. So Rudra, I think today we might see something different. We might see some short covering, but that's a long-term story because India is going through the end of a cycle. The world is going through the end of a cycle, and that's not really changing. So FIS selling, I expect will resume again. If you remember, FIS selling had started way before the Iran war started. So the end of the Iran war doesn't change that. You're right. I'm long on TCS. I'm long on KPIT Tech, which I think KPIT Tech will be the biggest winner in the IT sector today because it has this automotive exposure. And auto sector should do really well today. So if there's auto stocks that open at a decent price, I definitely want to go long there. Like an M&M, Tata Motors, any of them, even automotive component stocks like a Samvardhana Motherson that has a significant export exposure. So I'd want to go long on auto stocks. There's still some time to the market opening, and I want to be focused when the market opens. I'd look at that sector. Banks will do well, but so the problem with the banks now, though, right, is they will see FIS selling continue. I was again listening to this interview where this it was Saurabh Mukherjee again who was saying that what the RBI did by putting a limit of 100 million on short positions in the dollar is they introduced this idea that the RBI will try to control the banks in India. That's not a good thing. If the RBI is interfering with banks once, it's a precedent to set. That is also going to make FIs a little bit nervous. So I don't think the banks selling is over. We'll see short covering. Obviously, we will. Strong short covering. If you're long, brilliant. But opening long-term longs on banks? No. Short-term? Yeah, if you get it at a decent price. I think one of the biggest winners today might just be this, KPIT Tech. Within auto, even if you look at a Samvardhana Motherson, let's look at the price. But this can be a very good long. Yeah, it's at a decent channel support as well. So for one day, if these things open at good prices, could be really good longs. Tata Motors for sure. Yeah, Tata Motors for sure. Should see a big spike. It's a highly volatile stock, high beta. So it should see a good spike. Kotak I'll stay away from. I don't know if you guys saw the news or not, but there was some scam ka thingy. So that will play emotionally. It's not a big scam, but emotionally there'll be something there. I'm long-term bullish on JK Bank, Sniper Dog. Like for Jammu Kashmir Bank, I'm long-term bullish until we have BJP government in the center because their focus, again, not politically inclined, just the economic implications of their policy. If Kashmir is being touted as mainland India and that we want tourism there, we want growth there, then Jammu and Kashmir Bank should do well, long term. 60-70, I don't think so, Vikram. I don't think oil is coming back to 60-70 for 3 to 6 months, barring a miracle. 80, I think, is a bottom for oil for at least 3 months because the supply chains will take that long to settle back in. Plus, we've already had disruptions that will take years or at least months to come back. Some of the oil fields that have been shut down, production that has been shut down, will take a few months to get back. And this premium isn't going away. Now, if we get a permanent ceasefire, if all the ships move away, Iran and Israel just make peace, then maybe it comes down to, then I think it comes down to 80, to be honest. But then it becomes a little more unpredictable, but we both know that's not really going to happen. So inflation is going to rise higher. There was an interview by this woman from the MEA, I think, and IMF. There were two women. One was from the MEA and one was from the IMF, I think. I'm not sure about their positions. But she said all roads lead higher. You can just Google that, right? On YouTube, you'll find it. All roads lead to higher inflation and slower growth, no matter what happens from here. So if it was April 15th today, I'd say recession is guaranteed, but slowdown is guaranteed, whatever happens. And banks, most importantly, central banks can't cut rates. That's the biggest problem. Yashpal, Tata Tech is a very controversial stock now. If you'd asked me this while Mr. Tata, Ratan Tata was alive, I'd say at these prices, blind buy. But we've seen issues in the higher management in Tata as a whole, right? I wouldn't want to invest in anything Tata right now. I want to see how this plays out, right? One of the guys who has done brilliantly for the organization as a whole is being questioned by one of the guys who has ownership in it. That usually doesn't bode very well. One of them has to have some motivation that is beyond what's good for the company. Otherwise, it wouldn't have become public. If both of them had the good of the company at heart, they would have kept it closed. The fact that it's in the news means one of them has a problem. That's not morally in the right place, right? If you guys just think about it. So I would stay away from Tata's just for that. If I'm going to invest in a conglomerate today, Birlas look much better. Birlas look much better. Adani is very discounted. So depending on how the Bengal elections play out, Adani might just be interesting. If I'm looking at a conglomerate, if I'm looking at technology stocks, I have so many amazing stocks available at such amazing prices. Think about Info Edge for a second. I don't think many people are thinking about going long on this. And the AI boom, I understand, right? Because of that, Info Edge will suffer. But look at the discount you're getting on Info Edge, right? It's down from 1,700 to 1,000 about. So it's a good 40% discount. I'd go into Info Edge if I'm going long. If I'd go into KPIT Tech if I get it at a good entry point today. Not think about Tata Tech yet. That whole conglomerate seems to be in a bit of an issue. Anything else, guys? If there are questions, I'll take them. Otherwise, I want to get to the market. We're either going to make a lot of money today or we're going to get stuck. So it's very important to be right present at the time. What else is so? What is going to crash? So most likely metals today. I can't guarantee that because the market is in an upswing, but I think metals will see some profit booking coming, especially the Nalcos. It's a pleasure, Janan. It also lets me think clearly. And if I was here to tell you that the market's going down. If something big happens, I told you guys I'll try to be there as much as possible. So no thanks needed. Just doing what I should be doing. Now, about metals, this is why I was short on metals, right? Because on both sides of the equation, they were going to suffer. If the war continues for long, they suffer because of a global slowdown. If the war ends, the war premium goes. So I think metals should see some profit booking today. I'd be surprised if they don't. Anything can happen in a crazy market. But I would be surprised if metals don't see sharp profit booking today. And thankfully, I'm short a lot of metals. I'm short Tata Steel, I'm short JSW Steel, I'm short Nalco. I'm also short Muthoot Finance. I built one yesterday because gold will also see profit booking, which in turn means Muthoot Finance also falls. Tarson's Products is an interesting company. I saw it a long time back, so you'll have to give me 2 minutes to just revise it all. Correct. So I think Saurabh Mukherjee has talked about this company a lot. This seems a bit negative to me, right? The FII decrease, but this seems quite positive. Retail holdings decreasing, that seems good. Very corrected. I think the market cap would be the only issue for me. 1,000 crores market cap having corrected. So if the stock hasn't participated in an entire bull run, there has to be some issues. Like this was supposed to be a massive bull run, right? Like starting all the way from here. Every stock rose. Why didn't Tarson's? I'd want to find out what happened there before I say anything about buying or not buying. I'd want to find out. It's interesting that the number of retail investors is decreasing while the stake is increasing. That's a that's a bit of a conundrum. Catch 66, 62 if you will. But Sniper Dog, 500 shares at $200, that's basically 10,000 rupees. Why? If it was my money, I'd say let it be. Yaar. Like if this was March 22nd, I'd say sell it because you can at least use the loss. Then I would sell it. But on April 8th, I wouldn't sell. I'd hold it. Maybe I'm going to make money this year and then I'll harvest some losses. No? Got to have some benefit come out of it. 5,000 shares, that's a lakh. You should have lost. If I was in your shoes, I would have used loss harvesting. Yaar. You should have asked me this 10 days back, dude. Selling it today, I mean, maybe if you get a rally, I guess, but I wouldn't. If I'm being very honest, I wouldn't. This stock does give like 295 to 400 about. So it does give 33% about rallies. And wait for one of those rallies to sell. And if I lose out, then I just think about this, right? Like I make what? I don't remember the IPO price, but okay, let's find out. $160. Oh, then you're still in profit. Yeah, I suppose once you get a little bit of a rise, IPO was 160, no? It's at $200. So you're still in profits. I would get out of the company. It might give me some returns, but it's not a good company, clearly, right? Falling throughout a bull run never bodes well for a company's long-term potential. So NetWeb, I don't think is in futures. I'm talking futures here, Eric. NetWeb, I think, is one of the best companies in India when it comes to playing the AI theme, the computing theme. But it's not in futures. So that's a delivery play. I wouldn't buy a delivery stock at these prices. The fact that it didn't correct is massive, I have to say, and I think it will go rise higher. So maybe a small tranche I could go in. I'm personally not going to, because I do think this market has some downside. Here's what I would request you guys to Google and research and then make up your mind, right? Look at all the oil shocks that have come in history. Even if you just Google oil shocks history, right? Let me do that for you. And I haven't done this yet. I just know this from memory because I did this research like a year back. So these are the oil shocks, right? Do you see anything common in all of these? Check the Dow Jones ka chart, check the Nifty ka chart. You'll find something common here. Every time we get a massive oil shock, you know what happens. And this oil shock has been called the largest oil shock in history. This wasn't like a small oil shock, the largest in history. Let's think about this 2008 oil shock, right? We don't remember that. We think of it as the housing crisis, right? That's what happened, but we don't remember the oil shock for some reason. So what happened in the 2008 oil shock? Let's find that out. Again, doing it live. I don't know how this worked. The point I'm trying to make is that this isn't over, essentially. So this was just speculation, right? Didn't last for too long. Let's see. Let's go to the AI mode and see how long it lasted. So even this one lasted for what, 3 weeks? 3 weeks is enough time. My point being, it's not over. An oil shock creates systemic problems that will show itself in a little while. So I wouldn't buy in delivery just yet. Second half of 2008, right? Markets had started falling below that. Before that, this happened here as well. 147 peak, we've had about a 125 peak, but we've also had a permanent removal of about, I think, 13-15% of gas capacity from Qatar. That's massive. 3 months, we're not going to see oil fall below 80, 85. So that this eventually becomes the same 4 to 5 month period. That isn't going to go away. And the 5 to 6 months is essentially when the price crashed. So it will come back down once the global slowdown hits, not because of the war ending. Yeah, that's why I wouldn't. I'll have to see how it plays out, Janan. Would I cut my short in metals? Off the top of my head, no. It is situation dependent. This is very fluid. Like, I think decisions might change within 5-minute windows today and over the next few days. But right now, no. So if I show you a chart, the reason I'm short on Nalco and I'm ready to take 1.5-2 lakh rupee lot per lot losses is because when it falls, if I look at the 2008 model, 122 to 39, that's 1/3. That means from here it goes to 130. The lot size is about 4,000. 270 on 4,000, I'll let you do the math. So I want to play for that. I want to play for a 1/3 price, which is somewhere here. If you remember, I talked about this. This is somewhere where I think Nalco should settle, maybe even low. So no, I wouldn't cut my shots. Not in a Nalco, not in a JSW Steel. This is like an year-long shot for me. This is a cyclical shot for me. JSW Steel, if it goes below its trend line, which it has been following for a while, by the way, like this is since here, right? May 2022, it's just continued along this line, take support at the 200 DMA. The day it falls below that, I know that's it. That's when it's going to go boom, flat down, straight down. So JSW Steel as well, no. Tata Steel, another one that I'm short on. Vedanta as well. Vedanta I might book out of because they have this whole value unlocking demerger thing going on. So Vedanta I might book out of. But the rest I won't. In fact, I'll look to add shorts. If they go up, I'm going to look to add shorts into Hindustan Zinc, Hindustan Copper, NMDC. That's what I would be thinking of doing. Again, for Tata Steel as well, this is their range, right? It's only after 2020 that suddenly these stocks decided to become massive. What do you think people thought here in 2008? That metal stocks are just going to keep rising? That's not how metal stocks work, right? They're cyclical commodities. All commodity plays work like this. So they have to come back down to reality. Now, if they take a final support here-ish, 87, 80-ish, or if it takes it back down here, that I'm not good enough to call. But I know it's going to crash. So I'd want to play for a long profit, not a short one. Any other questions, guys? All right, then. Thank you so much. It's always a pleasure. If you still have questions, just drop it in the comments of the video. I'll check in every 10-15 minutes and then we can discuss that. Yeah. Happy trading for everyone who's long. You're already going to be very happy. Everyone who's balanced, wonderful time. But I would book my longs slowly as I see the market sentiment change. Not in one go. I'm not saying it'll end in 3 days. It could go on for 2 weeks. It could end in 2 days. Depends on market sentiments. That's the read we have to keep. I will be long again tonight after seeing what has played out today. Hopefully, things work out the way I've thought. The analysis says that's how it should. But the markets are the gods. So maybe it'll humble us today. Maybe it'll humble me today. Or maybe it'll prove that good analysis can sometimes even work out in unpredictable situations. We'll discuss all of that tonight. Thank you. Happy trading.